Ladies and gentlemen, I welcome you all to the Q3 and 9 months FY25 post-earnings conference call of Jyoti Resins Adhesives Ltd. Today on the call from the management, we have with us Mr. Utkarsh Patel, Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the quarter and 9 months ended December 2024, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Ladies and gentlemen, good morning. I welcome you all to the Q3 FY25 post-earnings conference call of Jyoti Resins Adhesives Ltd.
Able to hear you.
As Q1, we were able to achieve 20% volume growth. Due to monsoon and all over less demand in Q2, it was flat. And now Q3 witnessed revival in our volume growth. Volumes for Q3 grew at 18% YOY. Revenue on an adjusted basis grew 16.5% YOY, driven by this volume growth. We have continued to put in strong efforts in our ground level work with carpenters and dealers, with several meets conducted during Q3 to showcase our product portfolio and improve our penetration in existing markets and create visibility in new markets. While we gain market share in this quarter in some of our strong cities and states, we have witnessed good response in our new states as well. The higher margins of more than 30% was led by softer raw material prices and increased volumes, thereby offering us better spread and operating leverage. Because of flat volume in Q2, we may fall short by 3 to 5% of our stipulated guidance of 20% volume growth for FY25. We continue to target 20% volume growth for the next 3 to 5 years, led by our efforts on the marketing front. We have increased the number of branches to 42 during Q3, and that was earlier 38, while also strengthening our sales force. Parallelly, we have onboarded CMO, marketing manager, and few ASMs. In terms of our capacity expansions and capex plans, we are looking to add another 1,500 tons per month over the next one and a half year at our existing plant, while we are looking at doing a greenfield expansions for a new facility on the outskirts of Ahmedabad to meet the initial needs of our storage of raw material, finished goods, etc., along with the potential to go up to manufacturing of 3,500 tons per month in the near future. Overall, we believe we are focused in our approach to markets and our strategy to maintain our number 2 position in the wood synthetic market, and we are aiming to increase our market share. This is the largest player. I'm now ready to take question and answer.
Just one clarification, the revised guidance is on an annualized basis for FY25. We are now ready to take questions. All those who wish to ask a question may use the option of raise hand. We'll first go with Madhu Rathi. Madhu, you can go ahead.
Hi. Good morning, sir. Thank you for the opportunity. Sir, I wanted to understand, was there a realization degrowth in this quarter, and was it because of mix change or due to raw material price decrease we have passed on it to our dealers?
There are 2-3 reasons. One reason is we have focused on the OEM sales also. So for the OEMs, the modular furniture makers, we have 3 product categories, and that have the different prices. As we are also in the economical grade for the OEMs, then mid-range and then the high range also. And the second thing is we have passed a few discounts to the discount in bill to some territories and some states to gain more volume growth. So these are the reasons for that.
Okay, got it. Sir, my next question would be, sir, we have seen our gross margin improvement because of raw material, but based on our strategy to increase the distribution and promotion expenses, sir, so what would be the impact that was offset by gross margin reduction? So, any range that for this quarter you can give us?
So range for the quarter four you are talking about?
No, sir. In quarter three, because of raw material reduction and the sales strategy, where how what would be the offset by both of these? So, wanted to understand on that sense.
Uh,
Let me answer this question. We have stayed at around 70% gross margin throughout this year. So we expect that to continue.
Okay, and sir, this would be a steady state gross margin even when the prices increase for raw material.
No, this is assuming today's raw material price and today's average realization. If raw material prices were to expand sharply, then of course, logically, the gross margin will contract.
Okay, sir. So, on your understanding and being in this industry for a so longer time, sir, based on like past 10 or 15 years of pricing, sir, what would be the average steady state margin that we can expect going forward?
Average steady state market, the gross margin should be depends upon the conditions of the raw material, but averagely we can consider at a 65% gross margin, because the main raw material is the VAM, vinyl acetate monomer, and that is imported material. And if we talk about the 15 years, 20 years of history, so there is not much increase in the particular this raw material. And as a retail, as we are in B2C, we need to give at least 1 quarter to pass on the prices if raw material get increased. So that particular 3 months maybe we get the reductions in the margin, but after that we can increase our price. And Pidilite is a decisions maker in this industry, as we all know that, and we follow them. So it is the 65% is 65% is a sustainable gross margin, we can say.
Okay, sir, understood. Sir, a similar question on our EBITDA margin, sir. So, this our longer term guidance of 22 to 25% was based on this 30 to 33% kind of reducing by 3-4% each from sales promotion and advertisement. Our efforts towards these, so the margin over the longer term would be sustained. So in a scenario where our gross margin reduces by from like 3-4% because of pricing getting normalized. So in that sense, sir, would we take a further margin reduction, or we would just take price hikes, or we would reduce discounts? So I wanted to understand in that scenario, how would the our longer term margin guidance play out?
So I think this year we may land on 29% of EBITDA. And for the longer term, we are giving the guidance always for the 25% of EBITDA. The reason is we have started, see, as an example, in quarter three, we have do good investments for the trade activities like carpenter meets, carpenter gatherings, then dealer meets. As an example, in quarter three, we have do carpenter meet 2,000 carpenters in a one gathering in a Rajkot. Then we did the dealers meet in 7 territories, like Ahmedabad. We have do the gathering of 700 people in one premise in Ahmedabad. So like that activities we have started to spend, but we are like to more spend into the now consumer marketing and brand marketing. So we want to lift our brand from here. So that spending is still ongoing, and in the next year we will see this investment into these activities. So that's why we are guiding as a 25% of margin.
Okay, sir. So my question was more regarding, sir. So I wanted to understand, sir, to protect this 25%, would we cater to a price hike in a scenario where gross margins have increased, or in that scenario, we would rather than increasing the prices to final consumer, we would reduce discounts to our dealers and advertisement. So I wanted to understand regarding the that sense, like if this 70% gross margin goes to 65%, where would the incremental 4-5% margin be? So I wanted to understand in that scenario.
So basically, the customer to broaden the customer base is the most priority, and to onboard more and more carpenters, more and more dealers whom can we associate. So we will not compromise at that way. But simultaneously, we are also focusing for the good margin premium products, and that high range premium product sales is also increasing. So that target audience is also associating with us, and that is give us the this result that we can have this EBITDA margin also. So we can continue for that also, but parallelly we will focus on the to broaden the customer base first.
Got it. So just a final clarification on the accounting entry for our loyalty points. So I understand that this revenue is deferred kind of a revenue, and we whenever the carpenter or dealer, whenever they'll redeem these points, will recognize it as a revenue. Sir, so I wanted to understand how is the margin entry for this, sir. So do we like book all the profitability at this moment, and only the expense part is kept on that the current liability segment, or is the current liability on a lower margin than what we are selling today, or it is at no margin, sir? So I wanted to understand regarding that.
Not much difference, because if we talk about the 9 months, that is only a 2 crore of difference. As an example, 32 crore rupees is redemption, and 32 crore is provisions, and 4 crore is redemptions. So that is not much difference in that.
No, sir, on the margin front, sir. So if I suppose, sir, if for 100 rupees, so if we have 100 crore liability on our books regarding to this redemption, sir, so whenever that goes into our revenue, sir, is that a like no margin kind of a scenario for us, or it's a very low
So,
margin scenario?
so let me answer that question.
Yes, sir.
Basically, as per accounting standards, there is deferment of revenue and proportionate expenditure. Okay.
Okay.
So both, whenever it gets redeemed, it moves to revenue as well as it moves to expenditure. It doesn't move in isolation.
Okay, got it, sir. That was what I wanted to understand. So thank you
Yeah.
so much and all the best.
Thank you.
Thank you, Madhur. We'll take the next question from the line of Keshav. Keshav, you can unmute and go ahead, please.
Sir, I'm trying to understand that why our EBITDA is flat since past 8 quarters, around 21-22 crores, and top line is flattish since September 22, which is 71 crore. So when will we break out of this range?
So as already I mentioned that quarter one we have taken the almost 20% of volume growth, and quarter three also it is good that 18% volume growth is there. So as we have given the guidance that we will grow by 20%, so it is as per plan. But because of the, as you know, that in building construction material, quarter two was very disturbed by all over demand and supply into the market, and all building construction materials quarter two result was not good as a volume wise. So that quarter two is disturbing for us, that can little stretch in our plan. But quarter four we are optimistic for that, and we will achieved our goal that almost 17 to 80% volume growth in that. So maybe we will yeah, lays for the 3 to 5% only. So we have started to grow from here, but see, in a history, if you can see, in 2020 we were at 100 crore, and then we grew by 180 crore. So that growth we have taken. So right now the main thing is the fundamentals process is there, where we are making our fundamental songs. We are focusing more to team building recruitments. As I mentioned that we have onboarded chief marketing officers, marketing managers. We have onboarded few ASMs in the newer territories. So these are the basic fundamentals we are making the strong from to grow from here.
Sir, at what discount are we selling Euro 7000 to with Fevicol for the same package, same product on an average?
So it's basically two channel partners are there, the carpenters also and the retailers also. Retailers means dealers, hardware and plywood shops. So basically we are passing 7 to 13%, depends upon the developed territory or developing territory, for the retailers, and for the carpenters same 7 to 13%.
So this is your retailer margin,
Uh,
right?
re- Retailer, to retailer also and to carpenter also, for both.
Sir, so is it 7 to 13% margin each for retailer or carpenter, or is it either retailer or carpenter?
No, 7 to 13% for the retailers and 7 to 13% for the carpenters also.
Okay, okay. So basically 7 to 13% margin for both. मतलब retailer का भी margin हमारा वो है और retailer is selling to carpenter. So both are getting the margin or only one, either retailer is getting or carpenter is getting.
No, both are getting the margin from our side. फिर इसके ऊपर एक मार्जिन रिटेलर का कारपेंटर के ऊपर भी रहता है कि जहां पे वो एमआरपी पे सेल करता है. सो उनका,
Okay.
यस. सो फ्रॉम,
Retailer and
okay,
okay, I got it.
okay, I just the clarity once again. 7 to 13% we are passing to retailers, and 7 to 13% we are passing to the. So both are getting these margins from us.
सर आई अंडरस्टूड दैट बट सर हमारा जो एमआरपी जो बिकता है प्रोडक्ट दुकान पे वो कि अगर पेडिलाइट 100 रुपए में बेच रहा है तो हम कितने में बेच रहे हैं?
Okay, so MRP wise, we are as compared to the Pidilite. For MRP, we are as compared to the with the Pidilite. But as we are giving the good margin, so retailers pass that margins to the consumers. So all over, जब consumer को यूरो जब बाय करता है तो वो पीडीलाइट से अट्रैक्टिव रेट्स में होता है.
सर अप्रोक्सीमेटली कुछ 10% 5% कितने डिस्काउंट में?
Keshav, he's already answered that we are giving 7 to 13% to dealers. Now, whatever is the MRP, this is the effective landed price will be lower than Pidilite. Then it is in his hand. What does he want to pass on over and above that?
Okay, in any case, sir, now the point is that Hamara, if you look at our stock, there is no institutional shareholding, there is no big investor, despite good performance, despite Concall and everything. Sir, so why don't we simply get a good auditor amongst the top four so that it can build confidence amongst the state shareholders? And why don't you list the stock on NSC? What is the problem?
There is no problem in that. There is a criteria of NSE listing. So we will going to fulfill this criteria in this March. So we are going to go for the NSE next year. So there is the criteria of 75 crore of net worth should be last 3 years. So that criteria will be fulfilled in this March. Second thing, recently Taparia Group is onboarded in our stock already last week. So it's a good news that they have invested in our stock of 3% of equity.
I don't know who Taparia Group is, but why
That
can't
is
we
that
just
is
get
that
a
is
good auditor?
Keshav, that's a large family office fund. So they have come on board last week. Regarding auditors, we work with RB Cabra and Associates, which is one of the top-notch auditors, which is working with Ecovis of Germany, which is again one of the top 3 auditors of Germany, right? So we've already changed the auditor and brought in a quality auditor last year itself.
Yeah, so which other companies is this great auditor auditing? I mean, except for Jyoti Resin, is there
I
any
think you
other
can. I
big
think you can
company?
look. I think you can look that up on yourself. Yeah, we've already shared the name with you, and their results are continuously audited by RB Cabra.
Okay, sir, thank you very much.
Thanks.
Thank you, Keshav. We'll take the next question from the line of Vivek Joshi. Vivek, you can unmute and go ahead, please. The next question from the line of Pranay Delia. Pranay, you can unmute and go ahead, please.
Yes, Utkarsh ji, many congratulations on good set of numbers. And we run a family office too, and this stock has been on our radar for some time. So I am not keen to ask anything number per se, but I have a few questions if I can ask them. Uh, what would be your 5-year vision for the company?
So, as I already mentioned, that the first we want to achieve 500 crore of revenue till 2027. But if we don't talk about the numbers, the first thing what our goal plan is that we want to be a national leading positions into white glue, and we want to be continue our journey into this particular segment till 1000 crore of journey. So this is the vision for that, because there is big room. The market is more than 7,500 crore, and we want to reach at least 1,000 crore of top line into that particular segment. And so as we are more focused into the tertiary sale also, so we believe in the repeat business, repeat customers only. So we have created a separate marketing department, promotion department, and separate sales department also for that. So the main criteria we want to achieve in ourselves, that if the carpenters has the mindset for the gluing applications, that the our brand name should be first in their mind. So this is the first criteria that we want to achieve, and
Okay.
efforts are into that visions only.
In the near future, are there any forward integration or backward integration systems or manufacturing out some way or the other? Are you looking at some way of that wherein there would be some forward integration or backward integration in your manufacturing process?
Backward integrations is very expensive, because 95% raw material is the VAM into particular this product, and there is no manufacturer into the India, and it's a huge capex for that. And particular for this volume, it is not required, and we don't want to diversify our focus with this, because already we are getting a good margin. So we don't want to go for that headaches of the capex and depreciations and that things, and it is very tough to maintain that. Rather than we need to focus to create more network of ours into the
Okay.
market.
So the thrust is on sales increase at the moment. As you said that you're looking at a certain quantum of turnover. And any new products in the pipeline in the near future which would be in sync with what we are doing, or any diversification into any diverse product from what we are doing. Something like, say, a Pidilite has got many products other than white adhesives.
Right. So as I mentioned, that is a big room for this white glue, and as we all know that since 60 years, the single dominant player are getting the good more than 90% market shares. So we want to achieve at least 30% market share first, and that is our goal plan. So we don't instructions for that. So it's a 7,500 crore market, and till we are at maybe lend this time to 280 to 90 crore. So it's still a huge gap to achieve this. So we want to focus into this product only.
Okay. And so the one question which I was looking at a manufacturing setup, I mean, is the cost of transportation relatively lot lesser than it would be if you would go for decentralized manufacturing, wherein, plants spread across India, or that is not feasible?
It is feasible, but right now it is a cost of only hardly 2% max cost, 1.5 to 2% for the transportation. So it is not required to for that. But if we plan very much, very high volume into south or east side, then we can think about that. But right now, we are planning for the brownfield expansions into existing plant. We have the space into that, and if we'll go for the 5 crore 10 crore rupees to invest into the existing plant, we'll get the capacity of almost double from here. So 500 crore revenue we can generate from existing plant, and after that we are planning for the greenfield nearby the Ahmedabad only right now. So
Okay, just A couple of more questions, sir, if you may permit, Utkarshji.
Pranay, can I just request you to join back the queue? And then you
Can
can ask
you
them.
just let me pop in this one, if possible?
Okay, sure. Okay, sure.
There's a lot of free cash lying in your balance sheet and looking what you're generating every month, every quarter, month, whatever it is. So, what is the use of the free cash that you have in mind? Do we look at some big dividend payout for the shareholders or any capex acquisition, or for that matter, how would be used?
So there will be the three parts of that. First, you already mentioned that dividend. So dividend, we are giving the 15% of the profit to our investor last 3 4 years. So we will continue for that. Definitely we can. But the second plan is, as I mentioned, that greenfield we are planning in the next 3 years. So maybe we will require 40 to 45 crore rupees for that. But it will be used by gradually, not in a single day. And the third thing, we most want to focus to develop our network into the pan India. So we are planning to open new states. We are planning to invest into making the branches. As I mentioned that last quarter 3, that our branches were 38, and if we talk about the quarter 1, the branches were 32. So 32 to 38, 38 to right now 42. So we have increased 10 branches in 9 months. So we are continue to grow like this, and we want to spread our network pan India. So we will invest to that. We have onboarded CMO, marketing manager, marketing team. We are planning. So we want to invest into that. So brand management, brand investment, we are going to do in a consumer also
You
TVC.
are selling only on cash basis or on credit basis?
No, credit basis
How
basically.
much is the credit period?
So it is averagely 118 days around. But if we talk about the old states where we are already mature and developed, so that is 75 to 80 days around. And for the newer market, it goes to the 120 days.
Have we had any write-offs in the near past?
परसेंटेज वाइज अगर देखें तो ऑल ओवर 17 years की हिस्ट्री में it is not more than 1%.
And we are not selling to any of these retailers or wholesalers or our distributors through any subsidiary or something. It is directly built from the company.
Directly built from the company. Yeah.
That would be enough for the moment. Wish you all the very best for the future, and we hopefully will continue to stay on as investors for a long time.
Thank you.
Thank you, Pranay. We'll take the next question from the line of Krishna Shah. Krishna, you can unmute and ask.
I have a quick question. My question is on the capacity increase that you mentioned. So for the same, do you plan to do any fundraise or the same will be done through internal accruals?
Internal accruals only.
Okay, got it. So that is it. Thank you.
We'll take the next question from Shubh Shah. Shubh, you can unmute and ask, please.
Yeah. Sir, you mentioned you increased branches from 38 to 42. So these branches are similar to depot, or are there something else? What is the role of these branches?
So that is similar to depot. So what we do, we appoint consignee and sales agents. So basically, it is not our investment into the capex for that, and their investment. So we are passing 3 to 4% to them, and they handle the stocks, inventory, billing, dispatch, etc. That is handled by them. So as an example, if we talk about these 4 branches, so that 4 branches we open into the UP. Recently, we are focusing on the UP and Delhi. So like that. So geographically, where it is easy to deliver to these retailers. So at that wise, we are opening the branches for that.
Understood. And so the last, you mentioned you moved from 30 or 32 branches to 42 branches. Where
Right.
have been, in what geographies have these branches opened?
Mostly it is in UP and Delhi. But if we talk about the Karnataka, so we have opened into the Mangalore also. Then in West Bengal, we opened 3 branches.
Understood. And so before this 32 branches, we did not have any or significant branches in UP or Delhi.
No. Yeah.
Understood. Understood. Another thing, sorry, what are the margins of this CSAs?
3 to 4%.
3 to 4%. Okay, understood. Also, You mentioned we give 7 to 13% margins to our retailers or dealers. What is the similar comparable number for Pidilite? If
It is 4 to 6%.
sorry, 2 to 6%.
4 to 6%.
4 to 6%. So, for example, uh, uh, 100 rupees MRP is same. For Pidilite, it would be 94, 96 rupees for the dealer, and for us, it will be much lower. Is it?
So this margin actually we are giving on the dealer price, not on the MRP. So after that margin, there is one room also for the retailers that they will sell uh, towards the MRP. So that is his call that how can he give the discount from MRP basis.
Understood. So MRP is same, but dealer price is different for Pidilite and us.
Right. The landing price is basically the more attractive, the loyalty programs annually, the quarterly offers. So these all are the difference between them and us.
Can you quantify, like, if Pidilite is 100, where would our landing price for the dealer be?
So it will be what I already mentioned, that 7 to 13% from the dealer price.
Okay, understood. Understood. And also, our volume grew 18%, sales grew 16.5%. So have we taken a realization drop of 1.5% this quarter?
So yeah, basically it can say, because as I mentioned that now we are in 10 products, so that has a different strategies, and actually we are, for the retailers we are running the different strategies also to grow the market. As an example, if we are in UP and Delhi right now, so we may pass some few discounts into the in-bill. So that in-bill discounts to do placements of our products, so that go to the little 1.5% realizations into that.
And so over the past 1 year or so,
I would request you to join that with you.
it's a follow-up question on the same thing. So over the past 1 year or so, have we taken a significant realization drop?
Mm, I think it's a 1.5%, not more than that, because that's why this margin is maintained. So it's not much variation into that, because right now we are increased the volume into the OEMs also. So earlier it was 3%. This year quarter 3 it is goes to the 6% for the OEM. So OEMs has this type. Don't run this type of discounts offers or annual loyalty programs or carpenter loyalty programs. So it is go to the flat to the OEMs, but there's a that has the different range, that economical grade, mid range, upper range. So that is the reason it's a mix of the realization basically.
All right, understood. Thank you.
We'll take the next question from the line of Vijay Shah. Vijay, you can go ahead and ask.
Yeah. Thank you for the opportunity. I just had two questions from my side. One is that, sir, we have guided that we want to be in the ballpark of 500 crores sales by FY27. And you said this year will probably end by about 280 to 90 crores in FY25. So are
Right.
you still confident of that guidance for FY27, sir?
So see, we tried a lot, and we have the plans for the 20% of volume growth. And if we'll achieve this 20% of growth, then definitely we'll can reach by 450 to 500 crore, and we want to continue for that. But as I mentioned, that quarter 2 was flattish, and that just spoil our average little bit. So maybe we'll land 16% of volume growth this time. Yeah, so next 2 years we need to work hard, and we need to go for 20 to 25% of volume growth. But our efforts are there, and right now we are optimistic for the coming years for that.
Sure. Thank you, sir. My second question is that, sir, if I understand this a little bit on the overall business, you would agree that the capex to do a business is not very large. As you said, currently, you had said that from current 2000 tons per month, we are going to add another 2000 tons per month with a brownfield capex of 10 crores. I
Yeah.
think today you have clarified that it is probably going to be 1500 tons.
Right.
per month.
Right.
And the raw material, as you said, sir, 95% of the raw material is VAM, which is an imported product for everybody.
Right.
Right. So, sir, then what, if I were to ask you in a different way, is that, sir, what do you think is our moat that we are able to make 30% margins in this kind of business where raw material is not our distinction, the manufacturing cost is not so high, still we are able to generate 30% EBITDA margins. So what do you feel, sir, is a moat of our business that we are able to deliver such healthy profitability numbers?
So basically, it's see, if you can see, this is not overnight journey.
Sure.
Sorry.
Go ahead, sir.
Yeah, so it is not an overnight journey, and 17 years we have invested into this. 17 years we have invested into this business, and the main effort is to build the main is to build the trust into the carpenter's mind and into the retailer's mind, and that is the main efforts, and it takes years and long years, and this is the reason that we are getting the repeat business. And see, as an example, if we talk about the Gujarat, Rajasthan, MP, that are the earlier states, it is already more than 10 years into these states. So every year, these dealers has given us the business. Every year, this carpenter has given us the business. So it is always a repeat business, and these are the key things to focus into that segment. And so we know we want to continue for that. So this is basically that's why I chose this model. It is asset light model, and it is not require much capex into that, and not much higher technology into that, but it is require the more to work into the network building.
Sure. Thank you, sir. Wish you all the best.
Thank you.
Thank you, Vidya. We'll take the next question from the line of Bharat Gupta. Bharat, you can unmute the line.
Hi, Utkarshi. Thanks for taking my question. So a couple of questions from my side. So first, with respect to the newer markets, so I know you won't quantify region-wise data, but just to get a sense, what has been the volume growth across the new territories, and what kind of a challenges are we facing with respect to onboarding a dealer or a carpenter in these markets?
See, always it is a challenging to onboarding the new dealers, new carpenters. But it's as I mentioned that this is the process, and that we need to have the patience. Always it a B2C product, B2C industry. We are into that, so it always require patience. But yes, we got the more confidence into the retailers now, because as we have proven into the Gujarat, Rajasthan, MP, Maharashtra, so they are very confident now for our products, and they keep trusting in our sentences that is given by our sales team. But definitely we need to prove for that, and that is on process. And for the newer markets, in a percentage wise, it is we are growing more because the volume is lower into that territory. So if we talk about example, if in UP we are doing 10 tons, then right now it is in 20 tons. So maybe for UP we have taken the growth of 100%, but the volumes are low in the initial period. But we are targeting every state at 100 tons per month at least. So it is generate the 2.5 crores of almost 25 crore of revenue yearly. So we are targeting for every state to generate at least for that. The newer states we are talking.
And with the scale up of the new capacity, whether it is brownfield or the way we are looking at the greenfield, so we want this particular demand, which will be coming in from the newer markets or the existing market, that will suffice, or we will need to explore the newer territories or the access to the OEMs for meeting out the overall requirements.
All three together efforts are going on. We are focusing on the existing territory to penetrate more. We are planning to focus for the newer territories for the retail also, and we are onboarding the people and different channel partners for the OEMs also. So as I mentioned earlier, that we want to take OEMs also at least 15%, 20% of our revenue. So this quarter it is go to 6%. So we are aiming to at least reach 10% averagely year-wise. The first target is. So yeah, all three efforts together.
Right. Let's just a last question. So, like particularly if I look at the overall demand, so that is primarily linked with the real estate space in a way, because building material requirement is somewhat suffers to overall the demand which is emerging out from the real estate space. So, right now when we look at the RE space, it is primarily there in the mid cycle, and there will be a lot of completion which will be taking place just in a matter of near about 2 to 3 years. So whatever scale up which we are doing, is it pertaining to that particular side of the aspect, like where you see a good amount of trust and demand coming out from the RE space, and that will help in utilizing the overall assets to a greater extent?
Yes, of course. This is the reason for that. And second thing, the renovations also there. As populations going high, as now villages moving towards the towns and cities, and now people are spending with the aesthetical view of their houses, their offices. Like so, uh, people are earlier stage, they go for the renovation more than 15-20 years, but nowadays maybe 5 to 6 years, 7 years, people are also thinking about the renovations. So renovations is there, the newer markets, the developments of 2 BHK 3 BHK apartments. So whenever this real estate grow, definitely this product is as the rocket sky demand for that.
Sure. So we'll continue to maintain a overall 20-25% kind of a volume growth over the next 3 to 4 years. That remains our vision. And with respect to the new territories also, just to replicate the Gujarat model, that you seem kind of a visible option do in near future.
Right, correct.
Sure. That's it from my side. Thanks, Utkarshi, for answering the question.
Thank you, Bharat. We'll take the next question from the line of Pranay Area. Pranay, you can unmute and answer.
Yeah, thank you. Just a couple of more questions, sir. Your main raw material is VAM. So that is a direct function of which commodity, which would affect the pricing of a raw material, which will impact the margins.
So basically, it's a crude derivatives. But as I mentioned that in VAM particular, there is not much variations in the price happens only except the COVIDs. Because of that, 2 3 years that was disturbed because all the chemical materials and all the freight components. So otherwise, it is almost 60 to 75 rupees between per kg.
And which is the largest manufacturer of VAM in the world?
So there are the 4 to 5 largest manufacturers. So the is there, the DuPont is there. So they have the plants into the Taiwan, in Singapore, in Japan, in China.
Okay. And what is the geography that we currently cover in India? How much of it? I mean, you mentioned that the market size is 7,500 crores for the white adhesive market. और आप अभी आपका टारगेट है 500 करोड़ रुपए की टॉप लाइन पे जाने का, तो आप कितना ज्योग्राफी आप कवर कर रहे हैं और कितनी ज्योग्राफी आपको कवर और करनी होगी ये टारगेट अचीव करने के लिए?
See,
बिकॉज
right.
जहां पे भी आप है वहां पे आप ऑलरेडी नंबर 2 पहुंच चुके हैं, आप बोल रहे हैं, तो वहां पे इंक्रीमेंटल गेन विल बी डिफिकल्ट, यू विल हैव टू लैप अप न्यू प्लेसेस.
So right now we are in 14 states and जैसा मैं आपको बताया कि हम मैच्योर हो चुके, तो वो अभी एक्चुअली हम 5 स्टेट्स में मैच्योर हुए हैं आउट ऑफ दिस 14. सो ऑलरेडी बाकी के 9 स्टेट्स में भी काफी पेनिट्रेशन बाकी है, कि जहाँ पे वेस्ट बंगाल हो गया, तेलंगाना आंध्र हो गया, पंजाब हो गया, एंड फिर यूपी दिल्ली हो गया. तो इसमें हम ऑलरेडी प्रेजेंस है, हमने ऑलरेडी हमारे कंसाइनी सेल्स एजेंट्स अपॉइंट कर दिए हैं, हमारे इन्वेंटरीज अवेलेबल है, हमारी टीम अवेलेबल है, पीपल आर ऑन बोर्डिंग, द मार्केटिंग टीम, सेल्स टीम. सो ये नेटवर्क है, तो उसमें भी अभी काफी कुछ बाकी है. एंड फॉर द न्यूअर स्टेट्स इफ आई टॉक अबाउट, वी आर ऑल्सो प्लानिंग फॉर द न्यूअर स्टेट्स. हम आगे जाके प्लान करेंगे जहाँ पे एक अच्छा एक पेनिट्रेशन हमको अगर एग्जिस्टिंग ये 14 स्टेट्स में मिल जाए, एक स्टेबिलिटी आ जाए, तो उसके बाद वी आर लुकिंग फॉर द ईस्ट पार्ट. भुवनेश्वर है, बिहार है, साउथ में केरला इज देयर, चेन्नई इज देयर. सो स्टिल 5 to 6 स्टेट्स जहाँ पे अभी ज्यादा हम आगे भी फोकस करेंगे करके.
Thank you, Utkarsh. You answered almost all our queries. We hope to interact again in the near future.
Sure, thank you.
Thank you, Pranay. We'll take the next question from the line of Poonam. Poonam, you can unmute and ask, please.
Yeah, hi. Thank you so much for taking my question. Mr. Patel, I had a question that two questions. Say that you are going to expand to other states. So my question is, which, and I think you already answered in the previous question, but if you could repeat, which are the states that you are looking to penetrate? And over the next, say, 1 to 3 years, what, according to you, would you have to spend in terms of marketing or your overall operating cost structure? How would it look like? And third question would be, how do you see your return on capital employed being uh, impacted?
So basically, the plans will be balanced plan because I believe that all the channel partners should be incentivized properly to grow the business. So we are obviously focused on to our employee, our recruitment, our inductions program. Second is our retailers who are keeping our materials, and the third is the carpenters. So we have two separate teams to for the retailers. There is a separate team, the sales part there, that team are collecting payments, order, and take care of the retailers to give the service to the retailers. And for the marketing and promotions, so for the carpenter loyalty programs, we have the separate team who are doing the gathering of the carpenters, the promotions, the loyalty program to give them the gifts or behalf of these loyalty program redemptions. So it's etc. doing by the marketing team. So this will be the balance plan, balance strategies all to put together. And for the newer states, I already mentioned that the UP, Delhi, the Punjab, and Chhattisgarh, the West Bengal, the South, Telangana, these are the more focused territory in which we want to do replica of our Gujarat model to include these states particular.
Right, sir. And we are already having strong return ratios, both in terms of return on capital employed and return on equity. Uh, uh, how do you see that shaping in the next 2 to 3 years?
I think that will be continue as it is for that because already we are having this sitting on the cash, so we will utilize into the proper way, and we will continue for that. So that will be as same what it is right now. It is almost it 40% around.
Okay, thank you.
Thank you. Pranav. We take the next question from the line of Keshav. Keshav, you can unmute and answer.
Sir, is the Euro 7000 brand with company or promoters?
Sorry, Euro 7000 brand
Is owned by the company or is owned by the promoter?
company.
Okay. And sir, like you mentioned that from 32 branches, we have gone to 42 branches. That's a almost 30% increase in 9 months. But sir, if we see our revenue has not moved. It is the same in March quarter, it was 71 crore and December quarter is 71 crore. So from 30% increase in branches, we are essentially selling the same quantum of goods.
So basically, when
Basically.
basically what is the scenario I am explaining you. So when the is open, that is a process. So basically we have set the network to grow from here. The branch is the first thing because that is the keeping the inventory over there, and you are appointing the consignee sales agents for that. So right now we are going to utilize the network of their particular CSA network. So these all CSA are have the network of laminate and plywood distributorships already. So we are choosing that CSA only. So we will leverage their network, their relations now, and after that we need to onboard our area sales manager, our sales team, our marketing team. So by saying this 10 branches in a different states, different cities, what we have appointed. So now this is the first basic step that we need to create for to grow from here.
Sir, also, if you could give us some idea that at what package are the maximum sales coming from, whether it is from bulk package 20 kg or it is from 500 gram 1 kg.
No, actually, it is mix, but I can give you the brief. The bulk packing is the 30, 50, and 60 kg. So our half revenue is from 30, 50, 60 kg, and half revenue is from 500, 1 to 5, 10, 20.
Okay, sir. Sir, and also, sir, there is one Nisha IT LLP which used to hold around 8%, 7.7%, and this is coming down every quarter. So is this a promoter group company?
No, no, it's not promoter group company. It's a separate entity.
Okay. And sir, since our valuations are kept on, they just keep on falling, even though you are showing such great volume growth. And sir, so I would request you to kindly consider increasing your payout ratio because, sir, I think our company is the cheapest FMCG stock and it is also the lowest payout ratio amongst the whole FMCG industry. So possibly if you increase your payout ratio, then maybe the market will develop confidence in our stock. So kindly consider that. Thank you very much.
Sure, we can definitely think positive about that. But I believe that all over market is the last 2 3 months is bleeding like anything, and because of the USA policies and the things. But I think it will be stable in next quarter, and then definitely we will think about that.
Thank you, Keshav.
Jyoti
We'll take
Resins
the next. We'll take the next question from the line of Shubha. Shubh, you can go ahead and ask, please.
Utkarshji, what is the cashback or reward which we are giving back to a carpenter post the purchase per kg?
So it's a 7 to 13% what I mentioned. That depends upon the newer territory and depends upon the already developed territory.
But if I were to put a number to it, like 15 rupees, 25 rupees, 30 rupees per kg.
200, so it is almost 15 to 20 rupees per kg.
And it has been the same, I think, since uh,
Uh,
we-
it's very to very state wise, very to very. If, as an example, right now we are onboarding people into UP or Delhi in the newer states, then there is definitely an attractive programs running on, so that we can onboard the people. So it's a different. It's very to very. So
and
we,
what
yeah,
what would be the similar number for Pidilite?
that is 2 to 4% they are doing for the loyalty program.
Understood. That's all. Thank you.
Thank you.
Thank you, Shubh. That was the last question of the day. Utkarsh sir, if you have any closing comments, you can go ahead.
Any questions remaining or it's done?
No, sir, that was the last question. If you have any closing comments for the community, you can just tell.
Okay. Okay, all over we believe that we are focusing our approach to the markets, and we'll maintain our strategies, and we will try the best to achieve our 20% of volume growth. And as I mentioned that will be the balanced strategies we will to focus onto the retailers, onto the carpenters also, and we'll keep continue to focus into the wide globe. And thank you very much for investing our company, and thank you very much for trusting our brand. We'll keep continue for growing. Thank you.
Thank you. Thank you to all the participants for joining on this call. And thank you to the management team for their valuable time. This brings us to the end of today's conference call. Thank you.